Hi, everyone, and welcome to the Buffett and Beyond Research Saturday Stock Market Recap for September 13th, 2025. And remember, folks, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And the market, well, what can we say? Market continued to move to new highs as it awaits the Fed meeting results this week. And the odds favor a reduction in interest rates to the tune of 100% surety of at least a 25 basis point move to the downside. And some are predicting a 50 basis point move all at once. Well, we'll see. And our weekly stock analysis video, well, Arista has been in our portfolio for quite some time now, and it's up 1,087% in the past 5 years. Could you believe that? And yeah, we do have this stock in our growth portfolio. In our ETF video, well, we look at two stocks in the semiconductor ETF, which have had some dramatic moves to the upside, and we're looking at a 200% move and a 400% move in the very recent past. Now, we looked at one of these stocks last week, but we're going to revisit it this week, and then we're going to look at the other stock that we didn't look at last week. So you're in for some surprises here, folks. And let us look at the S&P 500 index, and the blue lines, yep, they're volatility lines. And usually when they start coming close together like that, well, not usually, always, when they start moving close together like they have in the past, there's a dramatic move one way or the other. And for a while there, it looked like it was going to be to the downside, or at least to this bottom band, one more time to test this level here, which you can see has been in the past a line of support. But instead, it turned around and it went up and it went above this top band, which is a powerful, powerful move. And usually it'll drop back a little bit and then make another test at that top band. And one thing to notice is we are getting awfully far away from this 20-day moving average, which is this middle line in here. And you can see that every time it gets up past it, it comes back to it. Goes up to it, comes back to it. So we'll see what happens this time. And down here, well, this indicator finally gave us a buy signal. And it's just been trending down, trending down, trending down. But the market has been slightly trending up, trending up, trending up. And again, this is the S&P 500. So we'll see what's going to happen this coming week, folks. It's going to be a very, very exciting week. And then when we look at the 6-month chart of the S&P 500, again, we want to emphasize that this 20-day moving average in here, the market has gotten away from it, maybe a little bit too much, and this indicator up here has reached another high point or overbought situation. So when you look at the market in here, we keep hearing about new highs, but it really hasn't moved that much. Well, enough to make money. So we're maybe looking at a little bit pullback this week, but it's hard to see the market doing anything before Wednesday except gyrate around and maybe move to the upside a little bit. Then when the word comes out, the question is, has the market already anticipated a 25 basis point move to the downside from the Federal Reserve? And down here, of course, here's that indicator one more time turning up. Now let's look at the QQQs, which is the NASDAQ 100. And boy, oh boy, it looks like it just wants to, it's starting to turn around up here, doesn't it? Yeah, so that might mean that we will get that little move down to the 20-day moving average. By the way, blue line is a 50-day moving average. This red line all the way down here is the 200-day moving average. And we can see with the QQQs, yep, it has turned up down here. But look at the volume. The green lines are the volume on the up days. We can see we've had 1, 2, 3, 4, 5, 6, 7, 8 up days in a row. But the volume, upward moving volume, is starting to dry up. So we just have to be a little bit careful in here about what we're doing right now, even though some stocks have made some dramatic moves. And we'll just keep looking at. But remember, the reversion to the mean is probably what we're looking at, especially with this indicator topping out over here. But then again, this indicator is giving us a new buy signal. So, okay, we're twixt in between, and that's exactly where the market is, waiting for the Fed. And the SPY, we have 3 SPY puts. This is for now about $180,000 portfolio. So the SPY is up, and remember the SPY is 1/10 of the S&P 500. Up is 500. Is 657, up 10 points this week. That's a lot. That's a big move, folks. That means the S&P is up about 100 points this week. That's pretty nice. And then the QQQs 586 as I'm recording this Friday afternoon, up 10 points also this week. Very, very nice. And again, we have portfolio protection in place just in case there's a dramatic sell-off of some sort or another. But yeah, we'll be rolling over the September puts or just letting them expire actually this coming week. And we'll go out, we'll buy some December puts. But we should be all right in here. You know, buying these puts, they're very inexpensive, and that's okay. And every now and then we'll sell a couple of call options or do some spreads just to get enough money to buy these. So, folks, we had a very interesting week this week, a very, very nice move to the upside this week, much better than last week. Problem is the volume is drying up a little bit, the upside volume, because the anticipation is that we'll get a quarter-point move from the Fed this Wednesday afternoon. And the key is, has the market totally anticipated that? And then what will it do after the Fed does lower, or if it does, and after what happens if it's already anticipated in the market? Meanwhile, have a good weekend. Go out, spend some of that money that you're making in the market. Enjoy yourself. Keep your mind off the market. Be with your family. Be with your friends. And most of all, stay safe. And we'll see you right back here in a couple of days.